Friends, in the series on the income tax cases, today we will discuss the case of Union Bank of India versus Deputy Commissioner of Income Tax. This case has been reported in 102 ITAT Tribunal at page number 235 and the matter has been decided by Bangalore ITAT A bench. The date of the judgment is 6th December 2022 and the assessment year involved is 1617. In this case, there were two pertinent issues before the ITAT. The first issue was that during the year, the assessee purchased some fixed assets. There was some cenvat credit. According to the rules of the cenvat credit, the assessee was eligible to claim the input of only 50% of the cenvat credit of the fixed assets purchased. The assessee adjusted that cenvat credit of 50% against its output liability and the remaining 50% assessee charged to the profit and loss account and claimed deduction as revenue expenditure. As far as this issue was concerned, the assessing officer disallowed this amount as revenue expenditure and said that the unutilized portion of 50% of the cenvat credit which is related to the fixed assets purchased should be capitalized and should not be debited to the profit and loss account. CIT appeal and the ITAT also upheld the order of the assessing officer in respect of this matter. And the order is also logical because the cenvat credit which the assessee cannot utilize, which was on the fixed asset purchased, cannot be claimed as revenue expenditure and it should become the part of the cost of the fixed assets and should be claimed as depreciation in the various years. So as far as this issue was concerned, this was adjudicated in favor of revenue by the ITAT. The second issue was that during the year, the assessee paid a donation of near about 3 crore rupees to an institution and this donation was in respect of the guidelines given by the Government of India, Ministry of Rural Development, that the donation should be given to the institute who is carrying the various activities relating to the employees' welfare. During the year, the assessee was incurring loss, the loss return was filed and the assessee disallowed this whole donation into the computation of income. Since the assessee was incurring loss, so the question of ATG deduction was not there. But during the assessment proceedings, assessee realized that this amount can be claimed under section 37 subsection 1. But the assessing officer denied the claim of the assessee and said that this cannot be allowed under section 37 subsection 1. When this matter came before the learned CIT appeal said that this amount can be allowed under section ATG, but since there is loss, so the question of ATG deduction does not arises. But the CIT appeal also did not adjudicate the issue whether this amount can be claimed as deduction under section 37 subsection 1. When this issue came to the ITAT said that this donation was wholly and exclusively for the business. The ITAT held that section 37 subsection 1 and ATG are not mutually exclusive. Since this donation has been given according to the guidelines issued by the Government of India, Ministry of Rural Development, so it can be said that this amount is expended wholly and exclusively for the purpose of the business, and if the assessee wants to claim it under section 37 subsection 1, then the assessee is well within the four corners of the law and this amount can be claimed as deduction under section 37 subsection 1. The whole issue is that if the assessee goes for ATG deduction, although there was loss for the assessee, even if the assessee is getting the full amount of deduction under section 37 subsection 1, there was no effect on the tax liability. But if the assessee is allowed the deduction under section 37 subsection 1, then he can claim the loss in the earlier years. So the assessee will be benefited in that condition. But if the ATG will be allowed, then it will be gone for the assessee, because this is the loss year for the assessee. So this is very important case as far as donation is concerned. When this is because of some compulsion or according to the guidelines of the government, then in those cases it can be said that the donation paid can be treated as revenue expenditure and can be claimed as full. At the end of this video, once again I am repeating the name of the case. The name of the case is Union Bank of India versus Deputy Commissioner of Income Tax, and this case has been decided on 6th December 2022, and the matter has been reported in 102 ITAT Tribunal, page number 235. The matter has been decided by Bangalore ITAT A bench. Thank you, friends.